Banks are closing. But it's not what you think. They aren't failing. They are being shut down for control. Why banks are closing might shock you. A hidden banking agenda is controlling the system. The global banking system is manipulating money and power. Central bank's power is shaping your financial reality. This isn't just a banking crisis. It's a system of control. Financial manipulation is happening under our eyes. Who really controls money? The answer may surprise you. Banks are shutting down while the public stays unaware. In this dark finance documentary, we reveal the truth. Stay with me and discover what they don't want you to see.
Have you ever woken up, opened the news, and felt that sudden punch in the gut when you saw it? Another bank, another safe, investment-grade financial institution, gone. Doors locked, accounts frozen, panic everywhere. Silicon Valley Bank, Signature, First Republic. Names that were praised as pillars of stability just days before, collapsing almost overnight. And every single time, the explanation is the same. The media floods the airwaves with soothing words. Regulators step in with rehearsed confidence. They tell you it was a liquidity issue, a mismanagement problem, a few bad bets, a few bad executives, an unfortunate accident in an otherwise healthy system. But be honest with yourself for a second. Does that explanation really sit right with you? Are we seriously supposed to believe that institutions armed with the most advanced algorithms on Earth, unlimited data, elite risk teams, and direct access to central banks are just accidentally stumbling into oblivion? If you've ever felt like the news is talking at you instead of explaining things to you, if you've ever felt that subtle sense of gaslighting, I want you to hear this clearly. You're not crazy. That instinct telling you something doesn't add up? That feeling that the game is rigged against the average person? That suspicion that these failures follow a pattern no one wants to talk about? That instinct is right. Because what you're usually being sold isn't an explanation. It's a smokescreen. A carefully constructed narrative designed to keep you calm, while something far more deliberate happens behind the scenes. So stay with me until the end of this video, because by the time we're done, you're going to understand exactly why banks don't really fail. We need to shatter one of the biggest myths in modern finance right now. The idea that banks shut down because they simply run out of money. That's the fairy tale version of the system. The version designed to stop you from asking harder questions. The truth is far more unsettling. Most of these shutdowns have very little to do with insolvency. They're about power. They're about control. They're about consolidation. Think about it like this. In a casino, the house never truly loses. So if a section of the casino suddenly shuts down, it's not because the house went broke. It's because the rules are being changed and the chips are being moved. What we're witnessing isn't a series of random business failures. It's an operational strategy. A system where the principles of organized crime aren't a flaw in the design. They're the operating system itself. And once you stop looking at banks as innocent businesses that failed and start looking at them as syndicates maneuvering for territory, everything suddenly makes sense. So if solvency isn't the real reason these doors are closing, what is? Who actually benefits every time a bank disappears? And who exactly is pulling the levers behind the curtain? That's what we're about to uncover. I know this is a lot to absorb. The moment you realize that the financial foundation of our society may not be solid rock, but carefully engineered quicksand, something shifts inside you. It is unsettling. It is uncomfortable. And for many people, it creates a quiet sense of isolation. That feeling that you are seeing something others either can't see or don't want to see. You start replaying the headlines in your head, the bailouts, the collapses, the excuses. And suddenly, the story you were told your entire life stops making sense. That is exactly why this community exists. Because once you see this pattern, you cannot unsee it. And carrying that awareness alone is heavy. So if any part of what we've uncovered so far resonates with you, If you've ever felt that tight knot in your stomach watching powerful institutions rescued while ordinary people are left to absorb the damage, pause for a second and leave a comment below. Share what you're thinking. Share what you've lived through. I read them carefully because this channel isn't built around an audience. It's built around people who are awake. And if you believe more people deserve to understand how this system really works, take a moment to like this video and subscribe. This isn't about vanity metrics or chasing numbers. Your engagement is the mechanism that allows this message to cut through the noise, to push past the algorithm, and to reach those who are already questioning the official story. Every interaction helps drag this conversation out of the shadows and into the open, where it belongs. So genuinely, thank you for being here. Now, with that foundation laid, it's time to go deeper. Because understanding that something is wrong is only the first step. To truly understand why this system behaves the way it does, we need to confront two uncomfortable questions. Who built it, and how does it actually operate? To answer that, we have to examine the DNA of Wall Street itself. Most people assume financial crime is a modern invention, a product of algorithms, glass skyscrapers, and complex spreadsheets moving at the speed of light. But when you strip away the tailored suits, the Ivy League credentials, and the polished legal language, a disturbing pattern emerges. The internal structure of major financial institutions mirrors something far older and far more familiar. Their hierarchy, their loyalty systems, their methods of enforcement and silence bear an uncanny resemblance to the classic structure of organized crime. This is not a metaphor designed for shock value. It's a framework for understanding reality. When you look at history closely, you don't see a moment where criminal enterprises disappeared and were replaced by respectable finance. What you see is evolution. The violence was outsourced. The threats were legalized. The enforcement mechanisms were rewritten into contracts, regulations, and fines that amount to a cost of doing business. The crime didn't end. It upgraded. And once you recognize that shift, everything else begins to fall into place. When most people hear the words organized crime, their minds immediately travel back in time. They picture smoke-filled back rooms, whispered conversations, men in fedoras negotiating protection, and violent collectors enforcing debts in dark alleyways. It's a gritty cinematic image that Hollywood has etched into our collective imagination. And that image is useful, because to understand the modern financial system, you don't discard it. You upgrade it. Here's the mental shift you have to make. Take that old mobster and swap the fedora for a tailored Italian suit. Replace the back room of a social club with a glass-walled boardroom on the 50th floor of a Manhattan skyscraper. Replace the baseball bat with a fountain pen, a derivative contract, and a compliance department. The scenery changed. The tools evolved. But the mindset, the objective, those stayed exactly the same. Extraction, control, consolidation of power. And once you see it, it becomes impossible to ignore. Strip away the branding, and the structure of a major investment bank and a traditional crime syndicate are almost identical. Orders flow downward. Money flows upward. Loyalty is non-negotiable. Silence is enforced. In the old world, that code was called omerta. In the modern one, it's called non-disclosure agreements, reputational blacklisting, and instant career death. No broken kneecaps required, just a closed door and a phone that never rings again. Here's the part most people aren't ready to accept. White-collar crime didn't invade banking. It became banking. There was a time when banks were boring, and that was the point. They functioned like infrastructure, quietly moving money, helping families buy homes, and supporting real economic activity. But over the last 4 decades, something fundamental changed. Through aggressive deregulation, the walls separating commercial banking from speculative gambling were deliberately torn down. Risk stopped being contained and started being spread. Losses were socialized. Gains were privatized. Banks quickly learned that there was far more money to be made manufacturing complexity than issuing honest loans. Even more profit in facilitating the movement of capital that wasn't supposed to exist in the first place. Illicit money doesn't disappear in a global economy. It needs to be washed, cleaned, injected into the legitimate system so it can be used. And that's when the orchard became poisoned. This isn't about a few bad actors slipping through the cracks. This is about a system that depends on institutionalized laundering to function at scale. Trillions of dollars from drug trafficking, arms dealing, human trafficking, and political corruption must pass through legitimate financial arteries. And the gatekeepers of those arteries are the world's largest banks. Without their infrastructure, the global criminal economy would choke. They know it. Regulators know it. Governments know it. And yet, the machine keeps running. You might ask, but don't they get punished for this? Yes. And that's the most revealing part of the entire system. Every few years, a headline flashes across the screen. A major bank agrees to pay $1 billion fine for laundering money for cartels or sanctioned regimes. It sounds catastrophic, until you do the math. If an institution generates $10 billion moving illicit capital over several years and then pays a $1 billion fine, that's not punishment, that's overhead. It's the cost of doing business, a licensing fee paid after the fact. In any other industry, knowingly laundering money for terrorists would mean prison, permanent shutdown, criminal charges. But in high finance, no executives go to jail. The corporation writes a check, the stock price shrugs, and leadership is rewarded for resolving the issue. That absence of accountability creates a moral hazard so vast it warps the entire economy. The message is unmistakable. If you are big enough, the law does not apply to you. And once you understand that, you start seeing collapses differently. When a bank suddenly shuts its doors, we're told it's about liquidity or solvency. But in a system built on concealment and networked crime, closures are rarely defeats. They're strategic retreats. Evidence disappears, operations consolidate. The game continues, just in a new shell. This is why the system never truly gets fixed. Not by elections, not by new regulations. You cannot reform a machine when crime is the engine. You cannot regulate a predator that has captured the referee. The rules are flexible for them and rigid for you. It's an architecture designed to extract wealth from the productive class and funnel it upward, quietly, legally, and relentlessly. And now we're ready to go even deeper. Because understanding the philosophy of this crime is one thing. Seeing the mechanism, how the money actually moves, why smaller banks have to disappear, and how the big laundry stays operational, that's where the puzzle finally locks into place. But before we turn that page, I need to know something. If this perspective is starting to click, if you're beginning to see the structure behind the headlines, go to the comments and write one simple sentence. I see the game. Just that. Because once you see it, you can never unsee it. There's a phrase that has been drilled into your head since 2008, repeated by anchors, politicians, and economists like a protective spell. Too big to fail. You're told it's about stability, about avoiding chaos, about preventing another Great Depression. The message is simple. These institutions are so large, so entangled with everything, that if they fall, we all fall. And so, the taxpayer must step in. That's the story you're allowed to hear. Here's the story you're not. Too big to fail isn't a warning. It's a license, a state-backed immunity card that never expires. Think about what that does to behavior. If you own a small business and commit fraud, you go to prison. Your company dies. The fear of failure keeps you in line. But if you run a systemically important financial institution, that fear is removed. Failure is no longer a consequence, it's a negotiation. Losses become someone else's problem. And when risk disappears, ethics disappear with it. This is the moment a bank stops being a steward of capital and becomes a predator. And predators need one thing above all else: liquidity. Here's the reality no one likes to say out loud. The global black market generates trillions of dollars every year, from drugs, weapons, human trafficking, and corruption. But cash is useless at scale. It's heavy. It's traceable. You can't wire a pallet of bills to buy a penthouse in London or a yacht in Monaco. To be useful, that money must be transformed. It must be washed. And this is where the system reveals its true purpose. Criminal networks are desperate to get their money into banks. And banks, leveraged, fragile, and starving for liquidity, are desperate to take it. This isn't a clash. It's a symbiosis. During the 2008 crisis, there were moments when the most liquid capital keeping major banks alive wasn't investor money. It was drug money. This isn't speculation. It's been hinted at by international agencies and buried deep in financial footnotes. The banking system became the global laundromat. But here's the key detail that explains everything else. Laundromats work best when they're centralized. Fragmentation is a risk. Small and regional banks are embedded in communities. They know their customers. They notice anomalies. They ask questions. That makes them terrible tools for industrial-scale laundering. They leave footprints. They create friction. The megabanks don't. When trillions move through your system every day, a few billion in dirty money becomes invisible. It's easier to hide a tree in a forest than in a field. And to funnel all that money into the forest, the field has to disappear. That's why regional banks keep vanishing. When a smaller bank is shut down, it's always sudden. A weekend seizure, locked doors, frozen accounts. Then, almost instantly, its assets are absorbed by a too-big-to-fail giant, sold cheap under the banner of stability. But look closer at what really vanishes in that process. The records, the logs, the transaction trails. A closure doesn't just end a bank, it breaks chains of evidence. If a smaller institution was being used to move money and the heat got too close, shutting it down is the ultimate delete button. Depositors are mostly protected, so the public stays calm. Meanwhile, the data is buried inside a mega bank's labyrinthine systems, where accountability goes to die. The flow doesn't stop, it's rerouted. What you're witnessing isn't failure, it's consolidation. An ecosystem being pruned not for health, but for control. Fewer banks, fewer entry points, total dominance over the flow of money. Because whoever controls the flow, controls everything. And here's the final uncomfortable truth. In this system, solvency doesn't matter. Utility does. A perfectly solvent bank can be sacrificed if it doesn't fit the plan, and an insolvent zombie can be kept alive indefinitely if it serves the laundering machine. Profit is privatized, risk is socialized. Fines are just tolls on the highway of corruption. Once you see this, the illusion of a free market collapses. The invisible hand has been replaced by a cartel's grip. And when you control the banks, you don't just control money, you control people. Let that sit for a second. Because this isn't abstract. It's about your savings, your assets, the cage being built around them. If this model is clicking, if you're starting to understand why the big get bigger and the small disappear, go to the comments and write 3 words. Follow the money. Because from here on out, it only gets more personal. This is the moment where everything clicks. To understand what's really happening, we need to tear away the comforting language of liquidity issues and interest rate exposure, and look at the system without anesthesia. Bank failures are not tragic mistakes. They are not random. In political economy, nothing happens by accident. There are only outcomes that were allowed, or engineered, to happen. The idea that these banks simply ran out of money is a story designed to stop you from asking the next more dangerous question. Who benefits when they disappear? Think of it like an ecosystem. When a massive tree collapses, sunlight floods the forest floor. Life rushes in to claim the space. But in finance, this isn't nature, it's design. A crisis isn't a catastrophe for the giants of Wall Street. It's a harvest. When panic hits, the big players don't drown. They wait. And when the water recedes, they feed on what's left behind. Every regional bank that collapses doesn't erase its market share. That power doesn't vanish. It is absorbed, quietly, efficiently. This is not a coincidence. It's a reshaping of the terrain. The alliance between government power and mega banking interests does not want a decentralized system made up of thousands of local institutions. That model is unpredictable, hard to monitor, hard to control. What they want is concentration. A clean, manageable landscape ruled by a handful of colossal banks that function as extensions of state policy. Crisis is the tool that herds the public into that structure. Now follow the path of fear, because this is where it becomes personal. When headlines scream that regional banks are unsafe, what does the average person do? They don't bury cash in the backyard. They move it. And where does it go? Straight into the arms of the too-big-to-fail institutions. Chase, Bank of America, Wells Fargo. Fear becomes the shepherd, the megabanks become the pen, and this mass migration of deposits becomes one of the largest wealth transfers in modern history, all disguised as a flight to safety. But here's the part they never say out loud. This consolidation isn't just happening through panic, it's being subsidized by you. When a bank collapses and is absorbed by a giant, the deal is often sweetened with public money. The government steps in and quietly guarantees losses, backstops bad assets, and removes risk from the acquirer. Translation: private profit, public insurance. This is the inversion of capitalism. If a small bank makes mistakes, it is erased. If a big bank makes mistakes, it is rescued. And if a big bank profits from eating a failed competitor, it is rewarded with taxpayer money. We are funding the monopoly that tightens around our own economy. We are paying for the rope while it's being wrapped around our necks. And because these institutions know this, they have no incentive to be cautious. Recklessness is rational when the downside is socialized and the upside is privatized. The printing press becomes their insurance policy, and profit is only part of the goal. The deeper objective is control. A system with thousands of independent banks is resistant. A system with 5 dominant banks is obedient. It is far easier to monitor transactions, enforce political mandates, freeze assets, or redefine acceptable behavior when power is centralized. The disappearance of the local banker isn't just an economic shift. It removes a human buffer between the individual and the state. In a community bank, you are a person. In a mega bank, you are a data point. And data points can be switched off. They claim this is all about systemic risk. But the real risk they're managing is losing control over capital flows, over narratives, over compliance. As the number of banks shrinks, the power of the survivors multiplies. What emerges isn't competition. It's a cartel, fused seamlessly with the political establishment. Banks fund campaigns, politicians write regulations, regulations destroy competition. The loop sustains itself. And here's the part that should make you lean forward. This consolidation isn't the endgame. It's preparation. They are clearing the board because they are about to introduce something new, something that redefines ownership itself. If you think losing banking choice is bad, wait until you see what they want to replace the old system with. These closures aren't the crisis, they're the setup. The doors are closing so something else can be locked in. I know this is heavy. It shakes everything we were taught about safety, ownership, and trust. But ignoring it won't protect you from it. If this realization sparks something in you, if you feel that jolt of clarity, leave a comment that says exactly this: I am not for sale. Because they may be buying banks. But compliance only works if you give it away. Now let's go one level deeper, because if you stop at bank consolidation, you're only seeing the surface. Consolidation is not the end of the story. It's the construction site. What's really happening is the quiet dismantling of the physical banking world itself. Look around. Regional banks vanish, branches close, ATMs disappear. What used to be sold as convenience is now being enforced as policy. This isn't modernization. This is demolition. Money is being transformed from a store of value into an instrument of surveillance. The old system is being torn down, deliberately, to make room for something entirely new: central bank digital currencies. Now think about this through a different lens. Imagine the mindset of organized crime. If you want to control a territory, what matters most? In the modern world, the ultimate territory isn't land or ports or neighborhoods. It's your wallet. It's your ability to transact. In the old system, flawed and corrupt as it was, cash gave you autonomy. You could act without asking permission. Cash was anonymous. Cash was freedom. And here's the detail no one mentions: that anonymity is precisely what makes cash unacceptable to the architects of this new system. To them, anonymity is a flaw, a blind spot, something that must be eliminated. Now comes the part that should make you uncomfortable. A CBDC is not the same as the digital money you see in your bank app today. Those numbers are still proxies for cash. A CBDC is different. It is programmable money. It is issued directly by the central bank, with total visibility and total control over every unit in circulation. When you connect this to the shutdown of independent banks, the strategy becomes obvious. They aren't just changing the system. They are closing the exits, one by one. Imagine this for a moment. Imagine your money comes with an expiration date, forcing you to spend when the system decides demand is too low. Now imagine your card declining because you've exceeded your monthly carbon allowance. Imagine being blocked from buying fuel, travel tickets, or certain foods, not because you lack money, but because your behavior no longer aligns with policy. This isn't speculation. These are features openly discussed in central bank documents worldwide. The future being built looks less like a free market and more like a company store. Obey the rules, or your access is cut. Here's where the organized crime model reaches its final form. In the old days, refusing to comply meant intimidation. Today, no one needs to knock on your door. They just flip a switch. Fewer banks, centralized systems, full integration with the state. Freezing assets becomes instant, silent, effortless. We already saw a test run of this. It proved something chilling. In a centralized financial system, access to your own money is not a right. It's a privilege. Now think about why regional banks are being allowed to burn. It's not chaos, it's pressure. People will always trade privacy for perceived safety. And when the next crisis hits, because it will, the solution will be ready. Here's the safe option. Here's the digital solution. But the price is permanent surveillance. This is no longer about inflation or interest rates. This is about power. About building a control grid so complete that no transaction exists outside of it. Control food, and you control populations. Control energy, and you control nations. But control money at a programmable individual level, and you control the person, their choices, their movement, their ability to function in society. Local banks once acted as buffers. Human judgment stood between the individual and the state. An algorithm won't hesitate. It won't question. It won't care. It will simply execute the code. This is the most dangerous truth in the entire puzzle. A digital prison doesn't need walls. It needs permissions. We are moving from innocent until proven guilty to allowed until blocked. Every purchase becomes a request, and as the system tightens, the power imbalance becomes unlike anything humanity has faced before. The so-called too-big-to-fail banks don't just survive in this system, they become its wardens. This realization shifts everything. This is no longer about fees or rates. It's about the fundamental right to exist without asking permission. The game is rigged because the house doesn't just own the table. It owns the rules, the chips, and the players. And I know this is heavy, but seeing the trap is the first step to resisting it. Ask yourself this: how much of your life is controlled by a switch you can't touch? Because once this system is fully installed, removing it won't be an option. So let me ask you something directly. If you understand that financial privacy is the last line of personal freedom, make it visible. Leave a comment below and write these words: privacy is freedom. Not as a slogan, as a line in the sand. Write it now. At this point, everything has to click into place. Imagine you're looking at a wall covered in newspaper clippings. A bank collapses here. A new regulation appears there. A digital currency pilot launches quietly somewhere else. At first glance, it all feels random. Noise, chaos. But now imagine stepping back. Far back. Suddenly, the dots connect. And when they do, the picture isn't accidental. It's mechanical. This isn't economic bad luck happening to us. It's a machine operating on us. The panic, the bailouts, the collapses, the consolidation, none of these are failures of the system. They are the system working exactly as designed. Now think about one word the media repeats over and over: insolvency. It sounds technical, boring, harmless. They use it to make you picture a bank that simply messed up, like someone who overspent and ran out of cash. But here's the detail almost no one mentions. Insolvency is a distraction. In this game, money doesn't disappear. It moves. When a bank fails, its assets don't evaporate. The loans, the properties, the customers, the influence, they are quietly transferred from weak hands into stronger ones, from small institutions into the grip of the giants. This isn't collapse, it's extraction. Imagine an ecosystem where variety dies and only one species survives. That's what's happening to the economy. We're moving from diversity to monoculture, from choice to control. And the system is betting on one thing, that you won't notice, that finance feels too boring, too complex, too technical to question. Derivatives, regulations, acronyms, a fog dense enough to keep you from seeing who's lighting the fuse. The same people who start the fire are the ones selling you the extinguisher and asking for your trust while they do it. Now zoom out through history. Every major crash follows the same rhythm. The Great Depression gave birth to modern central banking power. The 2008 crisis created too big to fail. And this crisis, right now, is laying the foundation for total financial surveillance. This isn't speculation, it's pattern recognition. Crashes aren't bugs, they are scheduled events. Volatility is required, fear is necessary. Because when people are scared, they don't resist. They comply, they don't ask questions, they beg for protection, and that's when the trap closes. Here's where it becomes personal. Imagine staying asleep through all of this. Not just losing a little purchasing power, but losing sovereignty. Imagine storing your time, your labor, your future inside a system designed to quietly devalue it and monitor it. That's not passive participation. That's funding your own cage. And understand this clearly. None of what you've heard is meant to paralyze you with fear. It's meant to snap you awake. Because knowledge changes behavior. The moment you realize this isn't a banking crisis, but a banking consolidation operation, something shifts. You stop panicking. You start thinking. You stop trusting the smiling faces on television telling you everything is fine while the exits are being sealed. You begin to look for alternatives. You question custody. You question money itself. That discomfort you feel right now, that's awareness taking hold. Here's the truth the elite never want to spread. Their power only works if you believe in it. They can survive protests. They can survive political fights. What they cannot survive is a population that understands the game and quietly withdraws its confidence. This entire structure rests on belief, on consent, on participation. The moment people stop playing along, the illusion cracks. Now imagine standing at a crossroads. One path leads to a world where a handful of banks control access to life itself, where money is permission, where dissent is punished silently. The other path leads to decentralization, resilience, and people who refuse to be livestock in a financial system. The fact that you're still here means you already know which path matters. You're no longer reacting to headlines, you're decoding them. When the next bank wobbles, when the next emergency measure is announced, you won't be confused. You'll recognize the move. And that clarity, that awareness, is dangerous to the system. So here's the moment where this becomes real. If this landed, you don't need convincing anymore. If you felt that shift, it already happened. All that's left is to acknowledge it. Go to the comments and write the only sentence that fits this moment. Not as a slogan, as a line you can't uncross. Type, "I am awake." If you're still watching, you already are. If you are still listening, it means you are part of the few who are willing to face these uncomfortable realities rather than ignore them. That is exactly the kind of mind we need in this community. If you want to keep peeling back these layers and stay ahead of the narrative, make sure you are subscribed. It is the best way to ensure you don't miss the next piece of this puzzle as we continue to decode the system. And since you stuck with me through the deep dive, I want to know who the real dedicated ones are. Drop a comment below saying, "Until the end." I always look for those comments first because it tells me who is truly serious about this journey. If this video gave you a new perspective today, hitting the like button is a simple way to let me know we are on the right track. Now, understanding why the banks are closing is just the foundation. You need to see exactly what they are planning to replace them with. I have a video right here on the screen that complements this breakdown perfectly. Click right there. And let's keep this conversation going.